Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I am a coach and senior manager with Charles Schwab. And today we are going to talk about popular technical indicators. And so these are technical indicators that are frequently used by traders. We aren't going to cover a huge number, but relative strength. We're going to look at the MACD. We're going to look at moving averages. We may throw in a little ATR or average true range, and we're going to look at, what these indicators are. So if I'm speaking a different language, when I say ATR or MACD or RSI for relative strength indicator, and you're thinking like, wow, I don't know what any of that means, you're in exactly the right place, because this is an introductory level class, and we're going to talk about what they mean and how a trader might use them. So that's what we're up to today. I invite you to follow Connie and I on X. Connie is a fellow coach and a friend. She's riding shotgun in the chat, and she's here to answer any questions along with me that you might have. So there are no dumb questions. Please ask, because if you've got a question, chances are there are a dozen other people with the same question. And there's, thousands of people that watch these in the archives, and they may well have that question also. So, quest away. But you'll want to follow us on X. My handle at Barb Armstrong CS, Connie's at Connie Hill CS. We're posting lots of helpful and informative content. It's another way for us to communicate with you outside of webcasts like this. And then you have the ability to reply and communicate back with us. So Rachel is saying that she is going to the market drive this weekend. So let me show you how you can, and you've got to register today, guys, if you want to come. Just spoiler alert, because I think they're going to close it down today. But anyway, know that if we look at options, and I don't believe we will, but if we look at options today, know that they carry a high level of risk and aren't suitable for all investors. But this is, all of this information is for general information purposes only. None of it to be construed as a recommendation or personalized investment advice. We're going to look at a whole bunch of different stocks and talk about how we might use these indicators, and this is what technical analysis is all about. But while our primary focus in this class is technical analysis, it doesn't mean that we think that's the IG, the only thing you should use when considering placing an investment or a trade. That fundamental analysis, being aware of what's going on globally in the markets with tariffs, earnings season, all of that plays a role as well. We use the Paper Money software application on the Thinkorswim desktop platform for our example trades. It's also where we will look at the charts. Okay, there we go. So I've designed this to be taught in a 9-week rotation. Today we're on to week 8. And if you're joining us for the first time, don't worry that, you won't understand because you missed weeks 1 through 7. First of all, you can do some binge learning, and Connie will post a link to this class in the chat. There will also be a link at the end of this webcast that you can click on if you want to go back and watch these. But next week we'll talk about, divergences, and then I usually will throw in a bonus session or two. The last time I think I did the 7 things I wish I'd known about investing when I got started. Sometimes we'll cover things like Bollinger Bands or maybe Fibonacci. So stay tuned. We'll have a couple of bonus sessions, and then we'll go back to the beginning of the rotation. So we're going to look at what technical indicators are. And we're going to review some common types of technical indicators, both trend and momentum, and then, discuss some example indicators like moving averages, MACD, which stands for moving average convergence divergence, and the relative strength indicators. And we'll look at how those can be used to provide both bullish and or bearish trade signals. Okay, so when we look at indicators and oscillators, like what's an indicator and what's an oscillator? Well, there are literally hundreds of technical indicators, and you could put like dozens of them on your chart or on your platform if you like, but for me, that's confusing. And the confused mind does what? Does nothing. And so you'll find that many traders will pick 2 or 3 that they'll use on a regular basis, or they might have half a dozen, but they don't tend to put them all on their chart at the same time. But there are literally hundreds that have been created to address a range of different trading styles and time frames. And the 2 basic categories are trend indicators and oscillating or momentum indicators. And a trend indicator we typically will see on the chart, something like a moving average, where an oscillating indicator, it usually has its own window below the chart. And we'll see the stochastics has its own window, relative strength has its own window, the MACD will have its own window, okay? And so that's how they're typically set up. And, chart tools, why would we even look at something like the MACD? Well, we're looking for more information. That's something that will give us greater clarity on pricing and trend, and if we think the trend is going to continue. And they're commonly constructed, and this one has both the MACD and this is a stochastic indicator, using historical price activity, volume levels, and sometimes a combination of both. Okay? And we'll get into how we interpret these in a minute also. Okay, so here's a trend indicator, a simple moving average. And you may have heard of exponential moving average, and you may say, what's the diff? Well, the difference between a simple moving average, so if you have a 30-day simple moving average, it adds up the closing price of the last 30 days and then divides by 30. And that's where this line will appear on the chart. It's the average of the last, and it could be 30 minutes, 30 days, 30 weeks, 30 months. So it can happen over any time frame. If we're looking at an exponential moving average, more weight is given to the most recent closing days. And so that moving average tends to move a little faster. So, but a simple moving average, like I just said, it represents, just let me get my drawing tool here, the average closing price for a stock or an index over a selected time frame. And that's what creates this line on the chart. And it just kind of helps lead the eye, and it helps us identify trend. And it can also be used to generate trade signals. In fact, if you go back and look in the archives, I had a simple trading plan, and it was based on a signal on the MACD and on, based on a 30-day moving average. And I'll show you that when we get to the MACD. Yeah, and so, when the simple moving average is rising, like we're seeing here, we call that bullish. It's uptrending, because it's going up and to the right. Okay. Whoops. Wrong drawing tool. Meant, it's going up and to the right. So it's uptrending. And, if it's going in the opposite direction, if it's going down and to the left, we'd call that bearish. So we call that a falling simple moving average versus a rising, if it's coming in the other direction, which this one is not. But we have had, even within this trend, short-term pullbacks, right? But the overall trend was uptrending. Okay. So here we have, uptrend, downtrend. And here, and in previous weeks, we talked about support and resistance. Sometimes these lines can act as a support, or these moving averages can act as a support or a resistance level. So here we see it came down and bounced off this moving average. And so you might say, well, this moving average is acting as a support level since it broke out. And here, you know, the price is falling below this moving average. And it looked like this was kind of acting as a ceiling or a resistance level. You know, it didn't quite get all the way there. So you may have had a quicker time frame, might have, you know, if this is a 30-day, the 10-day moving average might have been acting as a support level. And then it came and it broke out. And we don't know if this was a true breakout or in fact a fake out like this. It came above for just 2 days and then continued down. I call that a fake out because it crossed the line as if, you know, the downtrend might be complete and then, you know, failed to manage to stay above. It was like it was on a tramp and it went up and then it was like, came right back down. So it's important when we're trading that we acknowledge these and you know, consider, you know, how we're going to trade them. Okay, so with a momentum indicator, you know, it often will use the distance between two moving averages. And this one is using, and it's really hard to see, a 12 and a 26-day moving average, this MACD. It's very faint, but we've got two moving averages. And what we're trying to do, so one is a longer time frame and one is a shorter time frame. And what we're trying to see is short-term changes in price momentum. And it oscillates from selling momentum, which is red, to buying momentum, which is the green. But what we're seeing here on this particular chart, if I draw a line, is that we have a high here on the MACD and a lower high, but on the chart, what we're seeing is highs and higher highs. So we call this a divergence. And what this may be saying is that this uptrend may be waning. The momentum may be starting to fall. So maybe it could be coming to a close or to a point where it will consolidate and start going sideways. And so this is one of the things, and we'll talk about this more when we talk about divergences next week or the week after. But, you know, some people will use this as a confirmation of a trade signal. So if they see a trade signal here, they may then come and want to look here to just see, like, is this congruent? Okay. Is this reinforcing what I'm seeing with the trend on the chart? And if not, then what do I do about it? You know, so here's another oscillating indicator. This is called the relative strength indicator. And here, you know, these markers tell us, you know, it's saying it fluctuates between, it fluctuates between a low of 0 and it goes up to 100. And if it's below 30, it's considered to be oversold. And if it's above 70, it's considered to be overbought. And again, this is another area where we're looking to see, you know, if this is congruent. And in this case, you know, where the last one we saw a pretty marked difference, with this one, what we're seeing is we have this stock uptrending, and what's happening here? Uptrending. And then this pulls back, and this pulls back. And then this comes up again, and this is coming up again. So we aren't seeing a divergence here. We're seeing a confirmation of what is happening on the chart. Okay? And this here says no. What does that mean? It means that we don't have a trade signal showing up, which might happen here or here. And I can show you, if you wanted to add that to your chart, how you might do that. You can do the same thing with the MACD as well. So let's go out and look at some examples on the charts, because I think this is where, things tend to come to life. So let's start with Apple. So when we look at Apple, we see a stock that has been it's been uptrending, hasn't it? In fact, since this earnings announcement at the end of July, if I take this drawing tool here and we come up to here, it is up over 30%. It's up 32.5%. So this has definitely been uptrending, kind of within this range, right? Drawing where you draw your lines is, that's where the art of technical analysis comes in. Because some might say, well, why did I probably started this line here? You might say, well, I would have drawn this line like this, in which case, it's still within this range, isn't it? It's still within this uptrending range. But what are we seeing on the MACD? Well, what we're seeing on the MACD is that even though the stock has continued to go up, so we had a high here and a higher high, what we saw on the MACD was a lower high. And then even though this has been going sideways, this is, downtrending. And so that might tell us or be an indication that this uptrend may be slowing down a little bit. Now, it may not, just because we have this indicator, it's the same with candlesticks. There may be a candlestick that indicates that something's, perhaps moving to the upside. So if we looked here, when we're looking at our candlestick patterns, this is called a harami, where today's body is inside the day before. And this is not a pattern that requires confirmation, but the next day, did it move up? It did not. Now, it did move up after that. But then we got this inverted hammer. So another day of saying, hey, at a support level, if this happens, this can be considered a sign that this pullback may be complete. But with this candle, you want to see it close above the body of this candle the next day, which it did. But, and again, we had this harami here, and then it still hung out kind of going sideways for 4 or 5 days. So it's the same thing with the MACD. It doesn't mean that, oh, this is a for sure thing. There are no for sure things. And if anybody tells you there is, then run, because they're either not being honest with themselves or with you. So let's look at Cisco. Somebody's asking how you get the year-to-date change, et cetera, at the top. If you go to my X feed, I have that posted in the post pinned to the top of my feed, the script, and you can just up it, and it shows you how to, on that post also, how to import a script if you're not sure of how to do that. So that's how you can get that. So with Cisco, we had this, jump to the upside. This is a stock, it's up 30% year to date. It kind of went a whole lot of nowhere for a while, didn't it? And we saw that this followed through here on the MACD and on the relative strength indicator as well. And then all of a sudden it moved up, and it moved up here on the relative strength as well. So all three, what we're seeing on the charts, what we're seeing on the MACD, and what we're seeing on the relative strength indicator are all congruent. We're not seeing a divergence saying, hey, the buying energy is starting to wane. and on these up days, we had bigger volume than we've had on the down days. And so that's something that people may want to look at as well. Okay. So if you looked at this information and you said, I was thinking of adding Cisco to my portfolio, but I only want to add it if it goes up. And I'm going to be really busy for the next week because I'm going to the market drive in California and, et cetera, et cetera. So I'm going to be traveling. Could I put an order in if it closed above today's high? So today it closed at 78.20. So you could say, well, hey, if it closes at, 78.50 or if it reaches 78.50, like above today's high, then I would like to enter a trade. Okay. So how would we place that trade? And then where would I like to put a stop if the trade goes against me? Well, we might say, well, today's low is 76.45. So, or you might even go with this low here, because this is a pretty recent low also. And the lower your stop, the higher the probability that you will not be stopped out. And and a stop doesn't guarantee you're going to get out at a particular price either. But if we said, okay, here's 76 times 0.98, if we go 2% below that, our stop would be at 74.48. And so if we wanted to buy 100 shares, we would come here and right click and say we want to buy custom with a stop. And we aren't going to buy at the current price. We only want to buy if it goes up. And we want to buy it if it goes up above 78.50. So 30 cents above today's high. Okay, and I'm going to make that good till canceled because that may well not happen today. And then my stop, and again, it's going to generate a market order. So if the stock were to gap down, we could end up out at a lower price. We just went over an example in our trading a smaller account class, how that happened with CLAC, KLAC. And so we're going to put this in our growth stock group. Okay. Okay, so we're buying 100 shares and we're buying only if it goes above 78.50. And then we want to sell if it goes down more than $4.02 a share. So if it goes below 74.48, it will trigger a market order to exit. Okay. Okay, so that's an example of how we might look at different stocks and, make an investing decision. Now, if we look at McDonald's, what do we see happening on the charts? Well, I've already drawn a couple of lines here. We have this huge kind of coil happening, or this pennant pattern, and we spent a whole week talking about pennant patterns, which are characterized by lower highs, which is what we're seeing here, and higher lows. But what are we seeing on the MACD? Well, let me change my drawing tool. We're also seeing lower highs and higher lows. Or, if we drew it, we could draw that from here. We're still seeing higher lows. So, there's a congruency here. So what might that mean to us? And you know what? We're seeing the same thing here on the relative strength indicator. So we're getting the same story from both, our trend indicators and our oscillating indicators. So if something came down, if the stock came down here and bounced, might we have a higher degree of confidence then in maybe placing a swing trade within this band? Well, maybe. We don't have that indicator today. But what, we've seen is that there's a congruency here between the indicators. And, that doesn't necessarily always happen because we've just looked at examples where it didn't. Okay, let's look at NVIDIA. And I know this is one that gets an awful lot of talk, where we've got earnings coming up on NVIDIA this week. It's probably the most important earnings announcement of the week. And why do I say that? Well, if you come to the Market Watch tab and you look at NVIDIA, it has the largest market cap of any stock in this index. And then if you come to the NASDAQ 100, again, NVIDIA, huge player, 4.47 trillion, as opposed to 3.9 for Apple and 3.6 for Microsoft. So as go the fortunes of NVIDIA, it has a big impact on these indexes. Here's the S&P 100. So you can see it's a heavy hitter. But when we look at the chart pre-earnings, what are we seeing? Well, one of the things that some might find a little troublesome is that we have equal lows here, but on the MACD, we have a lower low. And so we've got a bit of a divergence potentially happening. So, and that's just something to be aware of. So if you own the stock, for example, maybe this is a time when you might want to collar your position to tide you over earnings, so that if it did gap down, and we've seen lots of gap downs, but and one of them was with CLAC, as I mentioned. And it was interesting with CLAC, because what happened is it gapped down and then rallied throughout the day. And when we looked at it in class, it was up on the day. But if you had a stop down here, then you may have been stopped out. Was it CLAC? If we look at Nike, they just came with earnings. Oh, no, they didn't. I'm just trying to think of who did. Somebody gapped down. So, and if they gap down and you have a stop loss, you could be out far lower than you were expecting. So it's important that, so this is where a protective put can be a valuable tool. Okay, let's come and look at Marriott. So Marriott was kind of going sideways, wasn't it? And then what did we see when we looked at the MACD? Well, we saw a pretty similar trend, didn't we? It was kind of going sideways. I should maybe move that line up a bit. So it was trading in a range here. It was trading in a range here. It was trading in a range here. And then when it broke out, we saw congruency on the relative strength indicator and congruency also on the MACD. And now today we have this Harami, which is indicating, hey, this may be moving to the upside. And this is a candle pattern that doesn't require, that does not require confirmation. And so if we wanted to place a trade, let's say we wanted to do a swing trade, could we just put in a target at this 295, the previous high? And, if we bought shares of stock, we'd be looking to make about $10 a share. And you may say, well, that's not much. But you know what? If you look at this and you say, if I could make $10 divided by 285, that's about a 3.5% return. And how long would we expect to be in that trade? Well, with a swing trade, I don't know, like how many days did it take to come down? 1, 2, 3, 4, 5, maybe a week, 2 weeks. Yeah. So, if we look at this and we say, in looking at these other indicators, we have confirmation that, it's kind of reinforcing what we're seeing on the chart. And then, of course, you can always come over and look at the news. What are the what are the analysts doing? So here we have BMO as an example, is raising their price target to 285. This bank raising their target to 288 from 262. It's interesting, isn't it? So Baird adjusts their price target to 290. And then you have Rothschild to 215. Well, 215 is so much lower, it's down off the chart. Jefferies adjusted their price target to 315. So obviously these analysts, there's a very wide range of where they think the stock price is going. This is $100 swing. But what we're looking at here, without going, and looking at all the fundamentals, which we could do, but we're not looking to buy and hold this. This isn't a marriage. We're looking for a short-term dating strategy where we want to just get in and make a little money to go to Disney after the market drive. And of course the market drive is this weekend, so maybe that's a bad example. Maybe you want to come to the advanced options thing in Miami in December and then hang on the beach for a couple of days. So if we put our target here, how might we put that trade in? And if we were going to do this with stock, let's say we're just going to buy that 100 shares, we're going to buy with an OCO bracket. Okay, and actually, I didn't figure out where our stop would be. So buy custom with bracket. We're going to come back to our chart and say, well, where's our recent low? Well, that low was 281.19. This was 280.99. Let's call it 281. So we're going to take 281 times 0.98. And on that, our stop is going to be at 275. Which is interesting. So $10 below basically, and our target is going to be, $10 above at 295. So on our trade tap, we're going to make our target here 295. And our exit is going to be 275.38. 275.38. And again, is there a guarantee that we'll get out? Like if it gaps up, we could get out for a higher price than 295. And if it gaps down, we could get out, for a lower price. So we're buying 100 shares. It's a $28,000 position. We have $1 million in this account. So if you said, well, I don't want any one position to be more than 5%, we could have up to a $50,000 position. So we're going to put that in our stock with a target. So now we know this isn't a long-term investment. We're just intending to be in this for a short time. Okay, so that's Marriott. How about CAT? So CAT has just been, moving nicely up the hill, right? It's been uptrending. This is a 100-day moving average, the black line. And how can you tell which one is which? Well, you'll notice here at this top line, it says simple moving average based on the closing price. It's a 100-day moving average, and it's written in black. The line written in blue, simple moving average, 10 days. And then this one says simple moving average 30 days based on the closing price each day. And it says yes. And this is where we're getting these little arrows. It gives you a trade signal if it crosses and closes above the 30-day moving average. And then a potential sell signal if it closes below the 30-day moving average. Now, if we wanted to add that to the MACD, and make that part of our trading plan, we could come here to the MACD and hit our sprocket and say, hey, show us the breakout signals on the MACD as well. And now you'll see when it closes the baseline, it'll give you a sell signal if it's going from green to red, and a buy signal when it goes from red to green. And here we had a sell signal here, and it pulled back and then bounced, but why didn't we get a red or green arrow? Because it didn't pull back and close below. But the last arrow we had was a green arrow. So it's still considered to be a green arrow, if you will. Okay, but that's how you would adjust those. But when we look at these, what are we seeing on CAT that might be worrisome is that we're seeing that the momentum tends to be heading to the downside, even though, like from here on, you know, whoops. This was kind of going sideways. Okay, why can't I draw? Okay, maybe if I come here. This is going sideways. This is pulling back. And this is pulling back too. Our momentum indicator, our relative strength indicator is also pulling back. So if you were thinking of placing a bullish trade here, you might just pause. Yeah. Yeah, you never know what you're going to pick up in these classes. Somebody saying, I just jumped into this at random and now I know what those arrows mean. Yeah, it's kind of cool, isn't it? Yeah. Okay, let's look at travelers. Now, when we look at travelers, again, we saw, you know, this pennant pattern, it broke to the downside. We saw that reflected in both the RSI and the MACD. And, you know, it's now moving to a new high. So what this is saying, you know, when we look at this is that we have this congruency in our indicators. You know, that if you were thinking about investing in travelers, now you might want to come and see what the analysts are saying, you know. So, you know, some are raising their price target. It looks like some might be lowering their price target. You might want to come and look at fundamentals, but that's just another one to look at. What about CRM? So, you know, this one has been struggling, hasn't it? It's down 30% year to date. But what we've seen over the last several months, it's been kind of going in this sideways range. But what we're seeing on the MACD is that it's kind of coming up, isn't it? So maybe, you know, the selling pressure is starting to wane a little. Now, on the RSI, we're still seeing the RSI falling. So we may want to just kind of stay tuned. Maybe it'll just continue to move in this sideways range. And this is where some traders might look at an option strategy that takes advantage of something moving in a sideways range. But, you know, that's a topic for another class. So what did we look at today? Well, we looked at relative strength. We looked at the MACD. Now, we placed two example trades. We did one on JP Morgan. I taught another class today this morning, and we placed, you know, a whole bunch of trades there. But we placed we placed a trade on Cisco. Oh, and that one hasn't filled. Why not? Because we did a buy stop on that. And then we placed a second trade. Has JP Morgan, I thought that one filled. Let's come down here. And that one has a target. Okay, I've lost my trade. Maybe I put it in the other account. Okay, so I will go and look for that. And that one had a swing target. Now, I wanted to show you just one last thing, and that is something called average true range. So with average true range, what this does, when you add this, it says 14 Wilders. What this means is it's looked at the amount that stock moves from the high of the day to the low of the day over the last 14 days and gives you a number. So if we come and we look at our JP Morgan and we say, okay, how long might it take to get here? Well, in an average day, how much does this stock move? It moves about $6.70. And so if we're looking for a $20 move, could that happen in 4 or 5 days? It wouldn't necessarily be a big stretch for it to move that far in a week. And this is why some traders will look at average true range, or they might place a trade and say, hey, my target is going to be just $7 higher than where it is now, because in an average day, it moves $6.70. So they'll just go for a smaller target based on average true range. So we've looked at moving averages, the difference between an exponential and a simple moving average. We looked at relative strength, we looked at the MACD, and we looked at average true range. We placed a couple of example trades. I hope you have found this helpful and informative. I want to thank Connie for all her help in the chat, and to the people behind the scenes for helping bring this class to life. And of course, to each and every one of you who are both here live, and to those of you who will be accessing this in the archives, thanks for checking this out and for being part of this community. This weekend, those that will be in Anaheim at the Market Drive, I will see you there. If you haven't signed up, it's not too late. This is free to attend, but you've got to register. So please make sure that you like this webcast. It helps move things up in the algorithms. You'll also want to subscribe to the channel if you haven't done that already. If you're interested in joining us at this event, I'll just show you where you can sign up as we wrap. So you're going to come to schwab.com/coaching and come to in-person events. And here you can see the Anaheim Market Drive. It's November 22nd. It's basically right across the street from Disney. So if you need a new pair of like Mickey Mouse ears, you know, you can come. We'll have the coffee on. We provide breakfast. We'll provide a lunch and a great reception at the end of the day. So guys, that's a wrap for today. Hope to see you in Anaheim. Take care, and I will see you in a webcast coming up soon. Lots of great content still to come. Stay tuned for swing trading coming up next.